Good morning all, this is the COT data video for the week beginning the 20th of January 2025. Obviously we've got Trump point 2.0, so that's something to bear in mind, and we're going to see a lot of fluctuations with risk appetite, especially with risky sensitive currencies like the Aussie, the Kiwi, the Euro. You could probably argue is going to be moving a lot pending any tariffs announcement. So we've got a very volatile couple of weeks, months ahead of us. So we can see that the herd are most long on New Zealand dollar, but they're most short on the USD. And we can see Aussie's pretty much slap bang in the middle there. CAD is just about positive at 53% long. So they are net long on CAD. They're just net short on gold. We're below 50%. So pending that we remain below 50%, they're net short, net long. Now the thing is, with the sentiment, we can look at things as they are, but we need to see what the retail herd are doing in real time. So when it comes to Monday, for example, say if the New Zealand dollar comes over here, what's happened is that they're long already, but they're going to add long. If they add long, it's going to be a stronger bias for a sell. Likewise, if the dollar comes over here, they're short already, but they're going to add short. And if they add short, then it's going to make it stronger, because obviously there has to be someone to take the other side of that transaction. And if like 100 million retail traders are going to do something on the USD, there has to be someone to take the other side of that trade. And that entity's got vast amounts of capital compared to us. We've only got finite funds. These banks and market makers and the bigger fish, they've got just a vast expanse of capital, so they can take the other side of the trade easily, and they can counter anything that the retail guys throw at them tenfold. So we obviously got to be careful. So if the retail herd move on the USD and it comes over here, it's going to probably make it a buy, and it's going to create a little bit of problems for the bot, because the QDB bot has got some Euro USD longs. And it's worth noting that Marco put some analysis in Discord. We've got a section called Bank Forecasts and Analysis, and he put some Goldman's research. I'm not sure where he gets them from, but it doesn't matter. And they're actually quite vocally bearish on the Euro USD, and they say that we're probably going to break parity, and that's what they're expecting. And Goldman's are obviously a huge bank, and we need to pay attention to what they say. If that comes to fruition, and we do go to parity, the bot's going to have some horrendous losses, and we're going to have a very substantially weak negative January, and it's going to probably be like the worst month we've had in a long time. So hopefully the euro doesn't completely plummet, but I can kind of see fundamentally the case for it, and I can see the fundamental case for a stronger dollar, especially if the sentiment aligns as well. And so let's look at the COT data, and we can look at the bank positioning, so we can see what's happening with the big fish. Come to the COT data. So we can see the USD has ticked higher, so that's a little bit on the plus. And so we've come from 8,000 to 12,000, so they've definitely increased. They have increased on the euro though, so there's a little bit of a, and we're having like some move in parallel, which isn't that useful. It's not that handy, but it is what it is. But they have sold the euro, and they're just basically just mirroring there. But of the two, the euro is definitely weaker. As you can see, they've sold the euro really aggressively, like they've done with the pound, which I'll show you. And so at the moment we have ticked higher on both, so we may have a bit of a choppy, undecided week ahead of us with the euro USD. Because ideally what would happen is that we have so here, and then we have a move there, and then at least we know, we've got like a signal, haven't we? But if they're moving together, we're going to have quite a lot of chop, I think. I'm hoping that the Euro USD doesn't completely plummet, because it was quite stressful to watch, to be honest with you. So hopefully we get some nice profits, but we'll have to wait and see. So let's look at the end, because we've got the BOJ on Friday, and of course we've got US holiday, and we've got the signing in of the new president as well. So it's a pretty huge week, and we see we're getting a little bit choppy around here. So quite a lot of mess and bit of chop. Yen has been sold off. We were positive, so that was of note, 25,000 to 29,000. So positive, then back down to negative. We have come off those lows. This is the BOJ intervention, and we had that big rally that you would have seen on the yen, and it actually was very effective. So that was good for the BOJ. Just chopping a little bit, and there's the dollar yen buy because the banks, the big fish, the non-coms, they bought the dollar over the yen, and that was last week. So you would have seen dollar yen strength because of that. Okay, Euro off, Aussie on. Now, I think this whole mess that we can see in front of us, I think that's to do with Trump 2.0 and the tariffs. And I think this is telling us, see that really horrible mess and chop and just awful lines and those crossovers. I think this is to do with the uncertainty of the tariffs because no one really knows what Trump's going to put out and whether or not he's completely decided what he wants to do either. He just plays it by ear. He'll just suddenly announce something, and of course that changes the perspective and the outlook of trade. And trade is what's moving the markets. It's the buying and selling of goods. And if someone comes in and skews that, it's going to impact everything, including risk sentiment and positioning. And because of that, I think the uncertainty around Trump 2.0, and this is what we're seeing right now, see, that's like just really horrible. At least here we had some kind of correlation, even though they shouldn't have been correlated because they shouldn't be moving together. At least it was not choppy and messy. This is just, this has been like chaos, isn't it? And currently we can see that Aussie has been sold off 77,000, which tells me that the banks and the big fish and the institutions, they're thinking it's not going to be too positive for the Aussie. And it's worth remembering about the Aussie bubble as well. We're just slap bang, dead on the middle. You couldn't be any more in the middle than that. Okay, 50-50 exactly. Okay, so it's a big week ahead for the Aussie, but I think this is Trump 2.0. Okay, I could be wrong, but it looks too messy for something. It must be that, I think. So Aussie off. We look at the pound. Pound's been heavy. We would have seen that in the price action. And I was saying back here, I don't know if you would have watched the video, but I was saying we would have had like some kind of break. See that those lows, and we have broken that diagonal support. Can you see what I mean? I don't know if it's clear. There, and we sold off. We broke that support, that diagonal, and we've broken the horizontal and carried on selling. And there's the pound USD sell set up there with the crossover of the dollar and the British pound. There's the GU sell. Okay, and we may continue into negative. We're just about positive at plus 438 contracts. If we look at things fundamentally, the UK isn't going to suffer as bad as the euro with the tariffs because we're primarily a services industry and that's what we export. But with the Eurozone, they export a lot of goods to the US, including the automobile industry. And so the euro is going to be hit. They'll be worse off than the UK. So that might suggest why we're just teetering above zero and we're just about positive. Pound off, CAD on. The CAD has been sold off very heavy, and it's just looking like we're trying to bottom, and maybe that was the bottom at nearly 200, minus 200,000 contracts. So the institutions, the guys who've humongous capital and the banks, they're really bearish on the CAD. It looks like they just stopped being so bearish on it. We are already very negative, but we're just sort of so heavy. And this would probably be likely oil related as well. And another thing to bear in mind is the Greenland macro as well. And that's going to impact the price of oil and shipping. And so CAD may depreciate further. That's a risk event in itself with the Greenland, but this is a bit out of scope for this video. So have a look at the internet, and Trump wants to he wants to own Greenland. So you just have a look, do a Google on that. That's going to impact quite a lot of things, including exports and imports, because he'll secure that shipping route. So that's of note. So more positive than the week prior, just okay. and CAD off, gold on, strong. Remember that the herd had sold. We were trading at $2,000 an ounce back here, and they had sold, and they were sort of thinking we shouldn't be above 2,000, and therefore they held onto that bias, and they got absolutely destroyed on that bias. So a good thing to note is have the COT data align with the retail sentiment. If they do, it's normally a very powerful indication. And we saw them short very heavily on the sentiment, and with the COT data coming up higher, that was a good indication to buy. And unfortunately, those guys got absolutely screwed because no one's going to survive a $700 move, even with the smallest lot possible. That is going to probably blow 90% of the accounts. So, got to be really careful, and you have to know your exit as well. Know when you're wrong. For example, if you were short at 2,000, if we get to 2,100, you're $100 offside on price action. And so you think, well, I should get out now because we could continue. We may come back down to 2,000, but there is a risk. And then, of course, we went to 2,100, 200, 300, 400, 500, 600, $700 move since they shorted it. And so, of course, they held on and they were stubborn. So it's really, really important to get the retail sentiment to align with the COT data, but to have risk management is so key. So that's that. Okay, so a little bit of a lecture, but it's really important because this is the riskiest thing that you can invest in. So it pays off really well, but also can do humongous amounts of damage as well. New Zealand dollar, and we're coming to the end of the video. Likewise with Aussie, it's just choppy. So this could be Trump 2.0, I think. We are breaking that range, which is good to see, and we are below that chop. So quite bearish in the Kiwi, slightly more positive than the week prior, however, just by 2,000 contra X. So fairly bearish, but I think this is just chop because of Trump. I think I don't want to blame him completely, but it's likely to do with that and that uncertainty. Swiss franc sideways, and it is what it is, isn't it? We're just slightly negative at 38,000, but we're within that range. We're above that low, and we're below that high, and that's it. So remember, we're going to be looking at daily videos going forward, and we had some good setups, some very profitable setups. Aussie Kiwi was a good one, and the Kiwi Swiss was also a good one as well. The dollar Swiss wasn't so good, but we did have the we had that rebound after the tweet about China. The dollar really fell, and then Swiss being quite weak, the dollar just took advantage of the Swiss weakness and it rallied. And so that wasn't a great one, but the Aussie Kiwi was good, and the New Zealand dollar Swiss. So you can see we had some wins on Friday there. Okay, so if you need me to help you with this, I won't mind. But we're just looking for blocks of colour, and green is buy and red is sell. Okay, so Euro CAD would have been a good one because you know the green. Okay, and that's it. So if you're looking at this and thinking, well, what is going on? There's too much data. At a very high level, red is sell, green is buy, and that's it. So if you want to come along and you know trial the sheet, it's pretty good. It's going to be 5 years old in January, so I'm probably going to celebrate and have some kind of promo in July, and you know, come along and trial it. And we've got a 2-week free trial. So you know, if you want to try for 2 weeks, then you're more than welcome. Just let me know your Gmail address, and you can contact me on Telegram or Discord or patreon.com/QuasiDB, and there's a messages section there where you can message me if you want to. And if you want to drop your email address, it has to be a Gmail, and then I'll give you 2 weeks free trial. And that's it. I'll speak to you guys soon.